we return to the loading screen, which allows us to create the budget or the projection for our next period. Simply, I add a period, and for this case, we're going to look at a projection for 12 months. I mean, we could have done this for 1 month or a quarter or whatever we wish, and I click the little budget button and the wizard, which takes us to an environment that allows us to quickly assess how our future will look. Well, first of all, last year we grew by 23%. This year it's a little bit tough. We're going to grow by 10%. That gives us about a $4 million business. We're going to keep our direct costs at about 62 cents. Our variable expenses, mainly commissions, about sort of 13 cents. Our fixed operating costs, well, we're going to hire some more people, so let's make that $450,000. We're going to increase our depreciation. Why? Because we're going to have more capital expenditure, and we're going to keep our average cost of debt at about 8%, our taxation rate at about 30%. Our receivables we want to bring down slightly to 50 days, so that's going to be a key performance measure for the future. And inventory is definitely to about 100 days, and we're going to have to pay our suppliers a little quicker, and I'll make that 60 days. And we're going to have about $120,000 of capital expenditure. Okay, now all of that's done. I have saved this, and within seconds we have a projected, as you can see, that's for 2009, the whole 2009 projected income statement and projected balance sheet. More importantly, if we just click on that column and we click on the scorecard, we can now go and review our future. What this shows us is your scorecard for the future. Now we're in a little bit of an easier way to be able to assess how effective strategy is. Well, what we notice is we're going to grow by 10%. Profitability is going to stay reasonably the same. Now, maybe what we need to do is actually think about a more strategic pricing or value creation viewpoint. We're going to do a 5% price increase, and we're going to temper our revenue growth down, our volume, in other words, just the volume growth, maybe to 8%, and see what that does. Wow, look at that. That's amazing. Hey? Just a 5% price increase, even taking volume down. We can even look at the net impact of that, and the net impact shows us, well, a net increase of $125,000, which is mainly price driven, giving us cash improvement. Yep, we like what we see. Turn to the scorecard, and basically now we can save this information for future reference. Well, thank you everybody for considering a global financial bridge. This is something that really is a way to be able to communicate how decisions impact your financial statements, both historically and in the future, and for you to be able to easily identify key opportunities and potential risks within your organization. I hope you enjoy Global Financial Bridge as much as I do. Thank you so much.